Are we witnessing the beginning of Australia's economic downfall? The signs are everywhere, and if you're not paying attention, you might just get caught in the storm. Australia's economy is at a critical turning point. The world is changing fast. Trade wars, global recessions, and shifting alliances are reshaping our economic future. Today, we are going to break it all down: what's happening, what it means for you, and where Australia is headed next. Let's start with what's making headlines right now: trade tariffs. Recently, former US President Donald Trump reinstated massive tariffs on steel and aluminum, a move that sent shockwaves across the global economy. Australia, once exempt from these tariffs, is now in the firing line. This means higher costs for Australian exporters, less competitive pricing, and a potential domino effect on jobs and wages. When Australian companies that rely on exporting steel and aluminum see increased costs, they have to make difficult choices: either absorb the loss, raise prices, or cut jobs. None of these options are good for the economy, and the impact is felt across multiple industries, from mining to manufacturing. But that's just the beginning. These tariffs are not a one-off event. They are part of a larger trend of economic protectionism, where countries prioritize their own industries over global free trade. For Australia, this is bad news. We rely heavily on exports, and if major trading partners start slapping tariffs on our goods, it could mean billions in losses. Protectionist policies create ripple effects. When one country imposes tariffs, others retaliate. This tit-for-tat behavior leads to higher costs, reduced global demand, and uncertainty in markets. Australian exporters, particularly in sectors like agriculture, wine, and mining, are at risk of losing key markets if trade barriers keep piling up. In the long run, this could force businesses to cut back on investments, stall wage growth, and make it even harder for new companies to enter the market. And we are already seeing the effects. The Australian stock market recently took a massive hit, over $45 billion wiped out in a matter of hours. Why? Because global investors fear that Trump's policies could trigger a worldwide recession, and Australia, being heavily linked to international trade, would take a serious blow. When international markets become unstable, Australia feels the impact almost immediately. Investors pull their money out of stocks, the Australian dollar weakens, and confidence in the economy drops. This is particularly concerning because Australia has enjoyed a long period of economic stability. If companies start losing value, it affects superannuation funds, savings, and overall economic growth. The big question is, how long will this uncertainty last, and how deep will the economic damage be? Now, let's talk about China, Australia's largest trading partner and a key player in our economic future. For years, China has been the backbone of Australia's export market, especially in industries like iron ore, coal, wine, and agriculture. In 2023 alone, over 30% of Australia's total exports went to China, with iron ore making up a massive chunk of that. But here's the problem: Australia is walking a tightrope between its traditional ally, the United States, and its economic lifeline, China. And that rope is getting thinner by the day. Why? Because tensions between the US and China have been escalating for years, and Australia is stuck in the middle. With Donald Trump's return to power and his aggressive economic policies, including reinstating tariffs on steel and aluminum, China is unlikely to sit back quietly. In the past, China has responded to US tariffs with its own economic measures, from trade restrictions to outright bans on certain imports. And while Australia isn't the primary target of these tensions, we are in a vulnerable position. If China decides to reduce its reliance on Australian imports, or worse, impose retaliatory tariffs of its own, the consequences could be devastating. We've seen a preview of this before. Back in 2020, when diplomatic relations soured over Australia's call for an inquiry into the origins of COVID-19, China hit back hard, slapping heavy tariffs on Australian barley, wine, and beef while restricting coal imports. The result? A multi-billion-dollar loss for Australian exporters, leading to job losses, business closures, and financial stress on entire industries. Now, with trade tensions on the rise again, the risk of another economic retaliation looms large. Sectors like mining, agriculture, and education, which all depend on Chinese demand, could take a major hit. And if that happens, we're not just talking about a dip in export revenue, we are talking about real people losing jobs, farmers struggling to sell their crops, and businesses facing financial ruin. And let's not forget about inflation, something that's already making life harder for millions of Australians. The Reserve Bank of Australia, RBA, has been battling inflation for years, using interest rate hikes to slow down price increases. But here's the catch: these tariffs and trade tensions could make things even worse. When the cost of importing goods rises, whether it's raw materials for construction, electronic components, or everyday consumer products, those higher costs get passed down to businesses and, ultimately, to consumers. That means higher grocery bills, more expensive home appliances, costlier cars, and an overall increase in the cost of living. We've already seen the impact of inflation on housing, where rising interest rates have made mortgages more expensive, pushing many homeowners to the brink. Add in trade disruptions, and construction materials like steel and timber could see further price hikes, making homeownership even more out of reach for many Australians. And it's not just homes. Fuel prices, electricity bills, and even basic necessities like fresh produce could skyrocket, squeezing household budgets even further. The bottom line: everyday Australians will feel the pinch, and for those already struggling to make ends meet, it's going to be an even tougher road ahead. So, what can Australia do? The reality is, there's no quick fix. But one of the most talked about solutions is diversifying trade partners. Right now, Australia is heavily dependent on China for exports, but that also means we are vulnerable to sudden shifts in Chinese policy. By expanding trade relationships with other major economies like India, Indonesia, Vietnam, and the broader Southeast Asian region, Australia could reduce its reliance on a single market. India, in particular, presents a huge opportunity. With a rapidly growing economy, a population of over 1.4 billion, and an increasing demand for resources, Australia has already been making moves to strengthen trade ties. In 2022, the two countries signed the Economic Cooperation and Trade Agreement, ECTA, which reduced tariffs on a range of Australian exports, from coal to wine. Expanding these agreements further could help Australia build a more balanced and resilient trade portfolio. Southeast Asia is another promising market. Countries like Indonesia, Malaysia, and Vietnam have booming economies and increasing demand for Australian agricultural products, minerals, and education services. The ASEAN-Australia-New Zealand Free Trade Agreement, ANZFTA, already provides a framework for boosting exports to these nations. But turning these agreements into real economic gains takes time. Establishing new supply chains, finding reliable trade partners, and navigating different regulatory environments isn't something that happens overnight. Another option: investing in domestic manufacturing to reduce reliance on imports. Australia imports billions of dollars worth of goods every year, from electronics to medical supplies to industrial equipment. The pandemic exposed just how vulnerable we are when supply chains break down. If Australia boosts its local production, particularly in strategic industries like medical equipment, renewable energy technology, and semiconductors, we could strengthen our economic resilience. Government initiatives like the Modern Manufacturing Strategy, launched in 2020, aim to revive Australia's manufacturing sector. But again, this isn't a quick solution. Building factories, training a skilled workforce, and making local production cost competitive with cheaper overseas alternatives requires long-term investment. The bottom line: Australia's economic future is uncertain. The global landscape is shifting, and the decisions we make today will determine where we stand in the years to come. Will we successfully diversify our trade and manufacturing? Or will we continue to be at the mercy of global power struggles? One thing's for sure: staying informed is key. If you want to stay ahead of the curve, keep watching and subscribe for more insights into how global events impact our economy. And if you found this video valuable, check out our next one on how to protect your finances in a volatile economy, because being prepared is more important than ever.